Alrighty guys, what is going on? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the top 3 stocks that have sold off and are extremely undervalued to buy and hold for the long term. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down in the comments. So guys, come on, let's jump into it. Roll the intro. Let's go. Come on. Bam. Alrighty guys, so stock number 1 is ticker symbol AMD. Now for those of you that don't know what AMD is a computer and graphics card company. They make a ton of money, and over the past year or so we've seen extreme growth from this stock, as you guys can tell. You know, before a couple years ago, this stock was trading for as low as $18, $20 a share, and me personally, I've been buying this stock for a couple of years now, and one of the main reasons why I love it is because of the overall idea of getting more dependent on technology. So for me, a lot of people always like to say that these companies are overvalued, and I completely get what you're looking at, but what I always like to say is, do you think we are getting more or less dependent on technology? Now, me personally, I think we are getting more and more dependent each and every day on technology. We have the metaverse, we have AI, and we are just getting started. You know, and the overall idea is pretty much these phones are people's best friend, and I definitely think that going into 2023, 2024, in the next couple of years, we will see companies like AMD, Apple, Nvidia, even in some cases companies like Tesla take off because of their software, their technology. And given AMD makes these great computer parts, they're not going anywhere anytime soon. It established a ton of support near and around this $100 mark. Right now the stock's trading at about $119. Given it sold off $50 per share, for me, this is just an absolute for sale sign for picking up this. Now, when you guys buy AMD, yes, you understand that this is going to be a more volatile growth stock. So yes, there is going to be a little more risk, but as long as you go into understanding that and you're very, very careful with which stock you pick, looking at all the earnings and stuff that the company is coming out with, you'll be all right. Looking at their past earnings, they blew expectations out of the water. They were up on their revenue, up on their earnings per share. So me personally, looking at this stock is just an absolute for sale sign to pick up a couple of shares, hold it, and a great strategy that I would recommend beginners to get into this stock would be to dollar cost average it. Now, dollar cost average it is a little different than traditional investing. Traditional investing is pretty much buy it and you hold it, and that's it. Now, dollar cost averaging, what you're going to do is you're going to figure out a good principal amount that you eventually want to invest. So if let's just say you want to invest $1,000 total into AMD, what you're going to do is you're going to invest maybe $100 per week over the next 10 weeks, or you can do it over the next 10 months. So what this is going to do is if AMD continues to sell off, that's completely fine, because you're going to be averaging down your shares. So once the stock recovers, just like we've seen time after time again, you're going to be making so much more money because your average cost is really low. This is a great way to reduce risk into these high volatile growth stocks. So AMD is a great stock, and I'm really excited to see where it goes in the next couple of years. Stock number 2 is Snap. Now, this is Snapchat. Over the past couple of years, very similar with AMD, we've seen a ton of growth from this. But Snapchat is a mobile app company, and a lot of people just think of them as that, and that's it. Well, Snapchat is a lot more. They are integrating augmented reality, which is different than virtual reality. Augmented is being able to put on, like something like the Google glasses and being able to communicate with others, maybe integrate smartphones so you can call, text people, have news come across, have your email come across, all right in front of you. And you don't have to really carry one of these because everything's all going to be right on front. covering your eyes, but you're still going to be able to go through life, see everything. And that's what Snapchat's been focusing on. And yes, looking at their past earnings, they did very, very well. They beat their expectations on revenue, beat expectations on earnings per share. Given the stock sold off from $83 all the way to $35, for me, this is a great way to pick up a couple of shares of Snapchat and just let it ride. For me, Snapchat carries a lot of potential, but it's going to be a little more risky for sure than AMD or those other larger companies. Snapchat is still a smaller company that is still trying to work its way up. There's still a lot of competitors in the social media field, but as long as they focus on other aspects of AI, the metaverse, they'll be just fine. The last and final stock that I actually want to go ahead and talk about is the one and only Apple. Now, Apple, looking at the chart, you can see, yes, we're slowly pushing its way back up. We have a little sell-off from 182 to 74, established heavy support near and around that 156 mark. Now, a lot of people think that it's going to hit this 177 mark and sell off. Now, for me, I really think we'll see a resistant breakout. Now, a resistant breakout is pretty much when a stock, very simply, breaks out of resistance. In most cases, it happens on the second try. And what that means is, we had this first try where it tried to break out to create new highs. This is going to be the second try. So for me, Apple's not going anywhere. Very similar to all these other stocks. People are heavy dependent on Apple. I think we're just getting started to see what they can do. Given they've executed very, very well over the past couple of years, and given that they've really outperformed all those indexes, Dow Jones, NASDAQ, S&P 500, and you get a dividend of 22 cents. Apple is just an absolute no-brainer investment for me, and I'm really excited to see where they go if they can break out of that resistance up here at 177. So guys, these are the top 3 stocks that I would recommend buying that have sold off. I hope you guys enjoyed it. If you did, hit that like button, and we will see you guys later. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down in the comments. And I really hope you guys had a great weekend, and we will see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe. Take care, everyone.